Hello, everyone. It is November 29th, 3:30 Eastern Time. The market is close to closing for today. Uh, so let me just clarify the U.S. stock market, actually. It's close to closing for today. So let's look at the stock for NVDA. NVDA. I've been watching this for quite some time now. This video is going to go over an options position that I put on Monday for NVIDIA. It was a bear call spread. And first, let's point out some things I pointed out on the previous video that's currently on YouTube. Uh, we were riding this 200 EMA. We're below the 200 EMA. This is the daily chart here, as you can see. And right now we're below that 200 EMA. So one support, now resistance. And then also it's overlapping a downtrend channel that has been established in the stock as well. This down here is basically just a display of volatility, IVR, and IVR is super low right now, and it looks like it wants to expand again, which it typically will do. So if we do see some expansion and volatility does go up again, then we should see some pressure come in for the stock itself. So a good way to play this, I decided, was a bear call spread. So it's a directional bias to the downside. And my strike prices are 170 and 175. Let's look at option strat. And if we look at option strat, let's go to that trade. And here's the NVIDIA bear call spread trade. 175 to 180 are the strike prices. The maximum credit for one contract is 108. Maximum loss is 392. And right now we're up 44 bucks. This is after the commission costs for the round trip commission costs. So option strat will give you this display, which is pretty nice. Let me just expand the view here. And also let's go back to December 2nd on the date from the expiration bar. All right, so December 2nd is where I would like to get out of this completely, or before, really. I really can get out right now because I've accomplished a third of the maximum profit, which is great. If I can get a quarter, that's great as well. But a third is really where I would like to be the majority of the time. I'm really close to getting half of the maximum credit right now, sitting at 45 bucks, up 45 bucks, and 108 being the maximum credit. So at 53 bucks, that's half of the maximum credit. I mean, you could go ahead and take that off the table and ride with it, go into something else. But letting this go too deep into the date of expiration, you run the risk of a rally occurring and, losing your gains. So, having a good span of time to expiration when you go into it, like 45 days tops, maybe 21 days, and then holding it for a week or two is a good strategy just to protect yourself from getting in a situation where you're subject to big losses. Initially, when you go into the trade, I like to see at least an 80% probability of profit. So a lot of times I'm looking to have a 15 delta um, on my short strike with credit spreads. Sometimes I may look for 20 delta, depending on what the market is doing. On this particular trade, I was pretty tight towards resistance, on the technical chart here. So that made me say, okay, well, I'm not too concerned about my deltas having to be way far out or really low. Instead, I was okay with, you know, selecting strike prices that were very consistent with the technical study here because I felt comfortable uh, being that volatility was super low and had a great chance of expanding. I felt very comfortable that pressure could set into this at any point in time. Uh, Another thing that I'm looking at is correlation. So if you look at the volatility index, I know this is the S&P, but the volatility index does typically correlate with everything on the market. And if volatility as a whole uh, gains some support here and gets higher, let me expand this a little bit so you can see on the daily chart, the VIX. Right now we're super low right now, so I'm looking for another expansion with volatility and another move down for the SPX and stocks as a whole. So if we do get that, we are seeing correlation with the entire market as a whole. So that gives us some better uh, pushing power to have a downside bias for NVDA and also several other stocks as well. But particularly this stock, NVIDIA, what we're looking at and studying right now, we see a great profit opportunity. So I'm just going to go ahead and get out of this. More than likely, I'll go and just get out before market closes today and look for some additional setups with this trade as it treks to the downside. I like to see a definitive move technically to the downside on the daily chart with this. If we do see that, then I'm sure that we'll be able to get some additional trade setups and maybe perhaps some other strategies. You know, maybe a straddle strategy with this as it continues to move to the downside, and a straddle will definitely protect us bi-directional protection. With the options set up. So if you are trading this utilizing options, you're definitely doing it the best way you possibly can to maximize your profitability while also minimizing the amount of equity that you need to achieve that profitability. So if utilized properly, you can have very calculated and very conservative approaches to achieving that goal on a consistent basis. So if you like to continue to follow me, feel free. It'll be great. And, I'd love to talk to you in the future and show you additional strategies and also videos on specific underlinings, specific stocks. And that way you can apply it in the real world. So hope you enjoyed this video. Definitely like me if you did. And feel free to leave comments. Have a good one.